Have you ever looked at the stock market and just felt lost? Like it's some kind of super complex code that only a few people have cracked? Well, this one's for you. Today, we're kicking off an adventure into India's national stock exchange, and I'm going to be your guide every step of the way. So, what do you say? Are you ready to get started? You know, every great journey starts with that first step, and we're about to take ours right now. Okay, let's dive right in. Before you go exploring any new territory, you need a map, right? So our first stop is just understanding the landscape. What in the world is the National Stock Exchange anyway? Let's just cut through all the intimidating jargon for a second. The easiest way to think about the NSE is as a giant, super organized marketplace. It's famous for being transparent and for using top-notch technology, which honestly makes it a fantastic place to start. But really, what matters is this. It's your personal gateway to investing in India's biggest, most successful companies. It's how you get to be part of the country's growth story. All right, now that we've got our map, it's time to gear up. I mean, you wouldn't try to climb a mountain without the right equipment, and believe me, investing is no different. So let's talk about the essential tools you're going to need for this quest. And it's so true, right? These aren't just suggestions. They are the absolute essentials for getting into the market and actually making your moves. Let's see what they are. Okay, here are the big three. First, you need a demat account and a trading account. They're like a team. The trading account is what you use to actually place your orders, to buy and sell stocks. But the demat account, that's the digital vault where your shares are safely stored. You gotta have both. And third, get to know the Nifty 50. This is so much more than just a list. Think of it as a vital sign for the whole Indian economy. It tracks the 50 biggest and most important companies, so watching it gives you a really powerful snapshot of how the country's doing financially. Awesome! You're getting equipped, but here's the thing. Every new world has its own language. To really navigate the space with confidence, you've got to understand the lingo. It might seem a little weird at first, I get it, but you'll be speaking it like a pro in no time. Let's start with the most basic, most fundamental idea of them all. When you buy an equity share, you're not just trading some code on a screen. No way. You are buying a tiny, real piece of that company. You literally become a part owner. And that, right there, is a really powerful concept. Now, these guys are a little more advanced. Let's call them level 2 stuff. You do not need to master these on day one, so don't stress. Just know that they're financial tools, basically contracts, that more experienced folks use to protect their investments from big, wild price swings. Kind of like a form of insurance, You are going to hear these two animal terms thrown around constantly. A bull market is when everyone's feeling good, confidence is high, and prices are charging forward, like a bull. A bear market is the total opposite. Investors are feeling pessimistic, and prices are pulling back. Those are the two main moods of the market, and you'll be hearing about them all the time. So you've got the tools, and you're starting to learn the language. What's next? Well, now you need a code, a set of principles to guide every decision you make. These are the timeless rules of the road that separate the smart investors from the gamblers. These 3 points right here, this is your foundation. 1, do your homework. Really understand the business you're putting your money into. 2, diversify. This is just that classic simple wisdom. Don't put all your eggs in one basket. And 3, this might be the toughest but most important of all. Keep your emotions out of it. Fear and greed, they are the absolute enemies of a good investing plan. Okay, now let's talk about a real superpower for disciplined investing, the SIP. It's like putting your strategy on autopilot. You invest a fixed amount of money on a regular schedule, and that means you're consistently buying shares, whether the market is up or down. It's an incredible way to build a habit, and it helps you buy more when prices are low without even having to think about it. And with that, your training montage is complete. You have the map, you've got the tools, you know the basic language, and you have your guiding principles. The path forward from here, it's all laid out for you. And if there's one thing you take away today, let it be this. This is not a race. You do not need a ton of money to get started. The real secret is to just begin, even with a small amount, and then stay consistent. That steady, disciplined approach is what builds real wealth over time. We've covered the basics. We've laid out the path. The opportunity is there, and this adventure is officially yours now. So the only question left is the one right here on the screen. What's your first move going to be?